the most unusual investment that you've made in the past 5 years?
I would say that was probably when I bought physical palladium back in the summer of 2009. I was looking at charts and I was looking at historical prices and supply demand, and it became apparent to me that it was undervalued. Some people thought it was because the Russians were selling their inventory and knocking the price down. So we bought some, and I actually ended up storing it in a safety deposit box.
And how did that work out?
Well, so far so good. Today it's a little under $600 an ounce. When I bought it, it was about $265 an ounce, and I sold a third of it in September of 2010 at about $750 an ounce.
So would you say that precious metals are a good way to protect yourself in this turbulent economic time?
I would say when you have all the world governments printing money and trying to keep interest rates low, specifically our country, there's a problem, because you can't artificially keep rates low at the same time that you're printing money for a sustainable period of time. So I would look to gold and silver and oil as a way to hedge against declining paper money, which I think is going to be the case in the next 5 years, and it has been the case in the last 5. What's interesting is that gold's been up the last 3 years in a row. It was up about 20% so far year to date this year. In 2010 it was up a little over 30%, and in 2009 it was up about 25%. Silver to me is more interesting because year to date so far it's unchanged. In 2009, silver was up about 45%. In 2010, it was up almost 90%. But if you go back to the beginning, in the start of 2009 to the peak, silver's been up almost 500%, and gold's been up about 250%. So silver's been outperforming. The other thing that's really interesting to me is that last year, for example, silver production was about 750 million ounces, but demand was 1 billion ounces. So you have a disconnect there that's not sustainable. And last year it was filled by scrap silver and also government selling it. If that continues, which I believe it will, that will drive the price up over time, because silver, unlike gold, has a use in manufacturing and production and technology, film. There's a whole bunch of uses for silver, but gold is really, except for jewelry, it just sits in a safety deposit box or a bank vault. So the fact of the matter is that there's going to be demand driving silver shortages, which should lead to higher prices.
I noticed your fund is up about 175% since inception in January of 2009. I also noticed that the Russell 2000 index is up less than 50% for the same period of time. How do you explain that?
Well, first of all, I compare my fund to small cap indexes because I do a lot of high growth small cap investing. One of my themes since the inception of the fund has been hard assets, which to me is defined as mining, precious metals, and energy, which is oil, coal, and gas. Starting at the beginning of the fund, I had a significant amount of the fund in those hard assets, particularly silver mining, particularly oil and coal. And in the last 2 years, those did extremely well. Not only in terms of the performance of the companies, but the underlying asset. As we already know, silver's been up significantly, and oil and coal prices have gone up as well during that period of time. So, again, going back to the beginning of our discussion, the only way I know to offset unstable governments and markets that are volatile is to own hard assets, which is exactly what I'm doing. I don't use leverage in my fund. I typically have 10% or so in cash. And so on a risk-reward basis, I think it's been a good proposition for myself and for my investors.